Hello and welcome to this video on economic profit. By the end of this video you should be able to understand the concept of economic profit. What is economic profit? Economic profit is defined as the difference between the revenue received from the sales of an output and the opportunity cost of the inputs used. Let's have a look at an example of opportunity cost. If you want to pass your final, you may find yourself studying very late at night. The consequence is that you might be very sleepy the next day. The opportunity cost of studying for your final is a good night's sleep. In economics, we see that as the cost of an alternative that must be forgone in order to pursue a certain action. So back to the cartoon, the cost of passing your final is to give up a good night's rest. In other words, the benefits that you could have received by taking an alternative action. If we apply that to businesses, the alternative for a business owner could be to have paid employment. Let's compare two important measurements of profit. Accounting profit versus economic profit. How do we calculate accounting profit? We first look at revenue and then at the cost of goods sold. In the example, 250,000 is revenue, cost of goods sold is 100,000. That gives you a gross profit of 150,000. From this gross profit you have to subtract expenses. That leaves you an overall operating income of 120,000. How does it work out if we look at economic profit? In economic profit, we still have 250,000 in revenues. The cost of goods sold have not changed, 100,000. So our gross profit is still 150,000. Our expenses are still 30,000, so again we have an operating income of 120. Where economic profit differs from accounting profit is that in economic profit we include expected profit. The expected profit that the business owner expects for his activities. The difference between the operating income and the expected profit is what we call economic profit. In other words, the profit level you are so satisfied with that you do not choose the alternative being paid employment. However, the existence of economic profit attracts potential suppliers to the market. It's important to establish this because, as you can see, if you exceed expectations, it becomes interesting to others as well. Let's have a look at the next video, in which we will have a look at profit maximizing output for a firm in perfect competition.